how big of a victory was when you talk about the red wave when Trump won, and how different would the climate be today? How different would it have been if it was a Kamala victory?
Michael Saylor just left Patrick Bet David speechless. Check out this incredible clip.
If it had been a blue wave, Bitcoin would grind up plus 25%, 30% against resistance. And the rest of the digital assets industry would degrade down 20%.
Okay.
Like every digital exchanges, digital tokens, digital securities, digital currencies, they would degrade and Bitcoin would grind up. And there would be that tension that you see right now for the last 4 years where Bitcoin is grudgingly accepted, under protest, and the other ones are being attacked all the time. But I think the red wave was the headwind becomes a tailwind. Bitcoin surges up, not plus 20, but maybe plus 50 or plus 60. I think, we go from that to this. And then the digital assets industry goes from degrading down to surging up. It goes from minus 20 to now it's coming back. Now there's a little bit more uncertainty with digital assets because we got to wait till next year to figure out what the framework will be. But basically, the polarity got switched from negatively polarized on the entire digital assets economy to positive with the red wave. And I think you just got to have a much more bullish view toward growth and prosperity and innovation in the next 4 years than you would have had in a blue wave.
Isn't it fascinating how political shifts can dramatically influence Bitcoin's trajectory? This highlights the resilience of Bitcoin compared to other digital assets. It thrives even under scrutiny, while others falter. Could this be the clearest signal yet that Bitcoin's dominance is inevitable?
Okay, so what do you think it's going to be by the end of Trump, give or take? High, low. If you're saying in 21 years it'll be 13 million, you're saying it'll be at 100,000 by the end of the year. What do you think it'll be by 2028?
I got a Bitcoin 24 model that's actually published on GitHub. You can Google it, and if you Google it, you can download it. And then you can crank in your assumptions and see our base case assumptions. And I think my base case assumptions, and it actually spits out the price of Bitcoin every year. And to tell you the truth, I don't have off the top of my head, I don't have the exact number for the end of 28. But I could tell you basically the model says it's like 55 growth to 52 to 50% a year.
Got it.
So it's like 50 to 45%
totally
growth a year
got
for
it.
the next 4 years. And that's like doubling every 18 months or less than 18 months in that range.
This projection underscores Bitcoin's unique position as a long-term asset. Sustained growth of 50% annually signals not only market confidence, but also a broader shift toward decentralized, hard money principles.
I got it. So roughly 350 is, if we were to say $300,000 to $400,000, that's about the number.
I wouldn't be surprised.
You wouldn't be surprised if it's a number like that. But because you're long term, you really don't care what it is. You're playing 21 years. You're not playing 4 years.
No, I'm in it forever.
And all your clients, how do you sell them on being in it forever?
Okay,
how do you sell them? If you're talking to me on the phone, I'm like, Michael, you want me to do what?
You mean my customers or my investors?
Customers.
Yeah, well, the customers of the software company, they're getting MicroStrategy software. They're delighted with the software.
Let me rephrase that. Investors.
Investors.
Yeah.
Okay, well, the investors are investing in the company because they want more Bitcoin. They don't want Bitcoin performance. They want to invest in a stock that can outperform Bitcoin. So we are a Bitcoin treasury company. And the way to think about us is if you just want straight Bitcoin exposure, you buy IBIT from BlackRock. And that's like overnight deposits. I'm buying, $1 million of Bitcoin, and if Bitcoin goes up 50% a year, I'm getting 50% a year, and I'm getting the downside and the upside. MicroStrategy will sell you bonds. We're basically the leading issuer of Bitcoin-backed bonds in the market. So what if you wanted the upside of Bitcoin without the downside? I want like 75% of the upside, but no downside, or something like that. You buy the convertible bond. And so a lot of investors of ours are bond holders, and what they want is low risk, low volatility Bitcoin. And you can do that through those fixed income instruments. And then the equity holders, they want high voltage Bitcoin. They want 1.5x or 2x Bitcoin. And so you can imagine when I give someone half the return of Bitcoin in the bond, I can give the difference to the equity holder. So I'm stripping the risk and the vol and the performance off of the bonds. I'm handing it to the equity holder. And then you've got derivatives and the options guys. They want 10x leverage, and they want 10x long and 10x short. So ultimately, you've got different classes of investors. You've got the 10x short, the 10x long, the 3x. There's actually two interesting ETFs, MSTU and MSTX. Okay, I think MSTU went from like nothing to $2 billion in AUM in 3 weeks. And MSTX, last I checked, out $1 billion. So imagine an ETF that siphons up $2 to $3 billion of capital in like a few weeks, no marketing. And what they offer you is 2x MicroStrategy exposure. So when I think about it, I'm like, well, if MSTR is 1.5x Bitcoin, then those things are 3x Bitcoin. And then the other bonds are like 0.75% of Bitcoin. What we're really doing is we're refining this crude capital. I use the analogy of Standard Oil or refinery. You put crude oil in one side of the refinery, and out comes kerosene, gasoline, and asphalt. And of course, you put kerosene in the jet engine, but you don't put crude oil in. And so what people want is they want refined petrochemical products. Or you could think of us as a transformer. I want high voltage power, and I also want low voltage power for my daughter's hairdryer. And you're like, well, you're losing if I put low voltage in a battery and I put it in my little kid's toy, it's very inefficient. There's a massive markup in it. But the point is the family wants batteries for the kids' toys. They don't want to electrocute Junior, right? So what we're doing is providing low voltage Bitcoin, high voltage Bitcoin. And the only way to do that is to have a 100% Bitcoin balance sheet. Because I have to have the $30 billion of Bitcoin to sell you the $3 billion of bonds that are 10x over collateralized that also give you the return of Bitcoin and the frequency of Bitcoin. Half of this is the return, but the other half is the volatility. The reason those instruments have value is because they're volatile, because I can arbitrage them and sell the volatility. So a lot of times people think volatility is a bad thing, but I would say it's like radioactivity and heat. And a lot of people are afraid of a fire and they're afraid of radioactivity, but you can't have nuclear power without radioactivity, and you can't have an internal combustion engine without a fire. And so MicroStrategy's put this crypto reactor in the middle of the company. And because we have that high volatility, high energy reactor, and it's like, people are like, aren't you going to diversify it? That's like taking this water and pouring it on the fire. Of course I'm not going to diversify it. Like, I give you fire, you're freezing to death, and the first thing you could think to do is throw water on it, right? So we're actually running the reactor, and that is really our unique value proposition to all those investors, and they can't get it except from a public company that's 100% committed to Bitcoin.
Doesn't this analogy perfectly encapsulate what makes MicroStrategy such a unique player in the Bitcoin ecosystem? By likening its operations to a refinery or transformer, Saylor is illustrating how the company refines Bitcoin's raw volatility into tailored investment products. Think about it. Low voltage Bitcoin for cautious bondholders, high voltage Bitcoin for equity investors, and extreme leverage for derivatives traders. Isn't this exactly what the financial world has been lacking? A way to cater to every risk appetite while staying 100% committed to Bitcoin's potential as a transformative asset?
Let me ask, there's rumors going on that the CEO of XRP met with Trump, right? Ripple. I think there's a rumor. Rob, if you want to pull it up, if there's something like that, I thought I saw something. Did Ripple CEO meet with Trump? Critics remark fuel XRP surge and speculation. CEO Brad Garlinghouse remarks amid XRP surge and a fuel speculation Trump stock. So if Musk is in there, Musk, my view, I may be wrong. Musk is meme coins. Musk is Doge. Musk is crypto. Musk is Bitcoin. For the most part, he's open to the idea. He's not specific to one thing. The community with XRP right now and Ripple, has anything with your position with Ripple changed since the last time you and I were together?
Yeah, what I'd say today is It's clear we have a pro-crypto president. They're all in on crypto. They're all in on Bitcoin. They're progressive. They're all about freedom. And freedom means, the 20th century securities regime was you got to spend $40 million on compliance to bring a company public. But what if I only want to raise $4 million in capital? How does it make sense that I got to spend $40 million on insurance in order to take a $4 million risk? So I think actually when we come January, depending upon who runs the SEC, I think you'll have a pro digital assets SEC, a pro digital assets Treasury, a pro digital assets White House, a pro digital House and Senate. Now, if you want the crypto industry to grow and prosper in the United States, you need a digital assets framework that is ethically sound, technically sound, economically sound. And that means this is a digital commodity, this is a digital security, this is a digital token, this is a digital currency, this is a digital NFT, this is a digital ABT, asset-backed token. If you define all those, and I did, by the way, in my keynote at Cantor Fitzgerald last Thursday, which has gone viral, I said, here is your digital asset classes. Now we need the regulators to give us that framework. Tell us how I issue, how I operate, how I own, how I trade. And if they do that well, I think actually we're going to see a massive explosion in digital assets in this country. There's no reason why half the equity on the NASDAQ can't start trading digitally. Why not Apple stock trade digitally 24/7, 365? Why not, why not Katy Perry issue a Katy Perry token if she wants? Or how about Joe, or how about your company? PBD, why can't you actually go public and issue your own digital security or a digital token? There ought to be an ethical way to do it. I think that the law ought to be simpler. It ought to be just don't lie, cheat, and steal, right? Like if we go back to this, right? If you believe in free markets, the free market view would be, I'm going to give people a way to do these things and just remind them, don't lie, cheat, and steal. I'm going to give them a practical legal framework. If you do that, I think there's 400,000 big companies that are private. There's 400 million companies. And I think the note that I made last week is 0.06% of the businesses in America are able to tap the capital markets. And so we have a crushing, over-regulated capital market regulatory regime that started in 1933. And I think that you need an alignment of the White House, the Senate, and the House to put in place a freedom, innovation-oriented digital economy. So I would say right now, I'm fairly bullish it'll happen. I think they want to do it. And I think that, I don't recommend any particular security or any particular investment other than Bitcoin. But I do think that it's better for the world if we have hundreds of thousands of digital assets created, launched. And I'd like to see the industry go from $1 trillion of digital assets to $500 trillion of digital assets that are tokenized.
Isn't this exactly what the crypto industry needs? A clear framework for digital assets that aligns with innovation, freedom, and economic growth? With the right regulatory environment, we could be looking at a whole new era for digital assets in the U.S.
Could there come a time where you're pro-Ripple and maybe even to the point that you recommend clients to it? Is there a possibility?
I'm Bitcoin only, 100%. Like the truth is, I wouldn't even recommend Apple stock. Like there's no security. I'm not going to recommend
0% chance.
Yeah, like I wouldn't recommend a security because there's a counterparty to a security. But the position is like if you came public and you had your own security or token or whatever you had, I wouldn't recommend you either. But it's not because I'm not in favor of your business. I just think that. I think that you have to stay in your lane, right? I'm not going to give you recommendations on diet or politics or any particular investment other than to say, I think Bitcoin is digital capital and it's a long-term store of value. And so having said it, though, I'm very much in favor of digital. I would like to see digital currencies, digital tokens, digital NFTs, digital
So you-
ABTs that are commercialized in an ethically sound, economically sound, technically sound fashion. I
So
think that's reasonable.
for storing purposes, Bitcoin. But how about transaction when it comes down to because the argument typically will be made for the transaction on how it is with Bitcoin.
I think that there's a massive opportunity for digital currencies, and that would be like stable coins, Tether, Circle. If you look at how people want to transact in the world, they all want to move digital dollars at the speed of light. And the challenge is in the US, there is no regulatory regime for a company or a bank or anyone to issue that stable coin. And I mean, there's two issues they got to resolve. Like, how do I back it, presumably with treasuries? And then how much freedom do I have with regard to the transference? That's an AML KYC issue. And I think that under a red administration, you probably get a lot more freedom. But ultimately, it's above my pay grade to decide that. I would just say that right now it's about $150 billion asset class. And it's very obvious the people have spoken. They want it. They need it. It's a humanitarian thing if you live in Venezuela or Cuba to have access to digital dollars. But I think that with a digital framework for digital currency that's endorsed by the administration, I think it goes from 150 to a trillion to 2 trillion to 10 trillion. And I actually think that that would create $10 trillion of demand for U.S. sovereign debt. It would be good for the dollar. But I also think that that would ripple through to China, to Russia, to South America, to Africa. The biggest geopolitical issue is our enemies and our friends may complain because nobody wants to use any currency other than the dollar. Look, no one wants to use the euro in Europe. They want to use the dollar in Europe. So you're going to actually have all sorts of politicians complaining to the State Department that our citizens are using the dollar. But if you want to spread the dollar to the world, you got to do it digitally. And I think it would be good for American values. And ultimately, it would be good for the world if we did support it.
If the U.S. fully embraces the creation of a digital dollar, could it become the world's dominant currency? Right now, the global financial system is dominated by traditional fiat currencies, with the U.S. dollar as the standard. However, as technology evolves and more people demand faster, more efficient ways of transacting, digital currencies are emerging as a potential game changer. A well-regulated, fully backed digital dollar could not only strengthen the U.S.'s position as a global economic leader, but it could also create an entirely new financial ecosystem. If the U.S. government provides the right framework and regulatory clarity, could we see the dollar surpass its traditional dominance and become the go-to currency for global trade and investment? This wouldn't just be a financial shift. It could change how we view sovereignty, currency, and the very nature of money itself.